Well, good morning, everyone. Today is August 20th. My name is Roger Scott. I'm the head trader for Wealth Press. And as I always say, let's get into it right now. We had the FOMC minutes and we had a lot of data to share. We've got jobless claims coming out in about 15 minutes. There's a lot to talk about. And because today's Thursday, I'm going to give you my two stocks that I would avoid like I would avoid COVID-19. All right. So we'll get into all of that in just a bit. So global stock markets fell Thursday after minutes to the last meeting of the U.S. Fed laid out challenges facing the economy during the COVID-19 pandemic. We're set to open a little lower, but the market doesn't open up for another hour and 15 minutes, and we have jobless claims in between that period. These are the expectations. Now, the 4-week moving average is about 1.253 million. We've done pretty good. Last time we were really below the level, which was great. The time before we were really above the level. The way I'm looking at it is this. If we can stay below this level, the moving average, we're doing okay. The expectations are substantially below this level. So maybe the Fed knows something that we don't, but this is what the range is. Actually, the truth is, this consensus range, anywhere from 875 to 875,000 to a million would be fine because, again, it would be below the average, and the consensus is not that far off the 1 million. It's 963,000. So, again, the expectations are good. If the number is above a million, if the jobless claims is above a million, that's going to be negative. So let's now go back to where we were. So Fed minutes from July reflected officials' view the pandemic weighted heavily on the economy and poses risk to the medium-term outlook. Medium-term outlook, folks, is not a quarter. That's maybe 2 to 3 quarters, which is what I've been saying. We need to see things shake out, and we haven't seen a shakeout yet. The central banks have been one of the main pillars, propping up the markets after it slashed short-term interest rates to their record low, essentially promising to buy as many bonds as it takes to keep the market running smoothly. And we've seen that. We've seen a lot of liquidity. We've seen a lot of stocks move higher. But again, folks, you can't take something that's dying and bring it back to life. There's only so much you could do. The markets have to kind of stand on their own, and they're having a very difficult time doing that right now. And they're going to have a difficult time doing that for quite some time. The Fed's minutes of the latest meetings released Wednesday showed policy makers are finding it difficult to forecast the path of the economy because there's just so much unforeseeability right now. We don't know if the vaccine is going to be effective. We don't know when it will come out. We don't know how fast brick and mortar stores will be restored, if they'll be restored. We don't know the state of the BK for these retailers. There's a lot of factors that are unknown right now. So the Asian region depends heavily on the health of the U.S. economy, and that's another factor. How do we know that China's telling us the truth right now? Are they really gearing back up, or are they still kind of in between? And I'm hearing really nasty things about the viruses in third world countries right now, spiking. So there's a lot of things that are on the table. Export-dependent Japan has sunk into recession, slammed by the slowdown in the U.S. as well as China. With production halted, tourism squelched, and consumption crippled. I'm going to read that again. With production halted, tourism squelched, and consumption crippled. I like that. I mean, I don't like that, but the word was interesting, the way they said it, the way they phrased it. Analysts say a recovery is likely coming for the world's third largest economy, but also acknowledge great uncertainty without a vaccine. And that's what I'm saying. There's just a lot of uncertainty. In addition to that, our president, God bless him, he's all about economy. Our president is like all about the economy. Health, economy. I love it. I like Trump. He's a character. We have rising tension between U.S. and China. There's no way around it, but he is pushing that trade war down their throats right now. The truth is, we don't need it right now. We've got enough worries. We got enough things to worry about. And a lot of the trade war issues we had on the table are going to be changed. So again, the best thing to do is to set it aside for quite some time. In the latest accolade for big tech, Apple's total market value briefly topped $2 trillion. The first time U.S. company has crossed that threshold. That's amazing. Technology companies, video game makers, Nintendo, are thriving. Remember what I told you guys, stay-at-home companies are thriving. Clouds, and we'll talk a little more about that. Crude oil remains at the 42.50 barrel, which is not really doing crude oil any favors, but at least U.S. companies are not bleeding as much. And again, we're going to have the jobless claim come out in just a little bit. Keep your eye out. If the number is below 1 million, then we're doing better than expected. If it's above 1 million, if it's closer to the 4-week average, things are kind of bumpy. Now, I promised I wanted to give you 2 terrible stocks that you want to avoid or sell short, which is what I like to do. So again, right now, if you look at the 10 major sectors, the weakest one is the energy sector. Over my cumulative 6-month, 3-month, 1 month, it's down 9.9%. I mean, outperforming the worst sectors. I mean, look at this. Utilities is only down 2. This is down 9. And the 2 weakest stocks that I could find that I really do not like, that have not been BK'd yet, is Evergy, EVRG. And if you look at the profile of this company, it operates subsidiaries, Kansas City Energy, safe, reliable energy primed in Kansas, Missouri. So it's a local company. The 1-year return, 3-year return have not been pretty. Earnings and the data is really, really fine. But right now, smaller. It's a Russell 1000 stock, which means it's a smaller company. It's just not doing that well. And if you look at the chart, the stock is just falling. Notice where we were at the trout of the COVID-19, and notice that it bounced, but not big enough. And now we're kind of going right back there. And right now, if we break that $50 level, I was going to say $55 level, which we already broke. I think we're going to take out the low or reach the low or test the low. But I think energy, especially this stock, is going to go down into the 40s, maybe mid to low 40s. But if you are long Evergy, not a good idea. If you're thinking of buying it, don't bottom pick this stock. There's a lot better stocks pulling back right now that are better buys. I do not like this stock. I would sell this stock. The other one, and by the way, it's on the bottom 10% of my relative strength scan. Let me prove it to you. So let's go to the weakness. So look at this. Where was the stock? Evergy right here. There's like 494 stocks here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, it's like literally in the bottom 5%. So it's a terrible stock. I don't like it right now. It's showing a lot of weakness. Maybe in the future it'll pick up, but it's a dog. And the second stock is actually the second weakest stock, Oxy Petroleum. Take a look at this thing. I mean, here's the low. We went from $9.50, $10 to about $24, and now we're back at $13. And this stock is a dog. It's already below the 50-day moving average. It never went to the 200-day moving average. And let's see. Let's put the chart on this one, and we could see the same thing. Let's look at the 50-day. It's crossed below the 50-day. Let's now add another one. Let's add the 200-day. Yeah, I mean, that's bad. I mean, below the 200, below... It did cross the 200. Look at that. One time and then 2 times, and then just fell right off. Just didn't have it. So again, Evergy, EVRG, and Oxy. Let's look at Oxy's profile real quick here. International Oil Gas Exploration Company, Latin America, Middle East, Occidental, one of the largest U.S. companies. It sure is. And right now, it's just terrible. Look at this. 5-year earnings growth, 69%. 5-year dividend growth. When companies starts cutting dividend, that's bad. That means they're bleeding cash. 5-year return, down 80%. Look at earnings per share growth versus previous quarter. Look at that. 238% down. And look at it versus previous year. 281% down. This stock is even weaker than EVRG, Oxy. So if you're going to pick one, go with Oxy, but they're both dogs. They're both dogs with fleas. So right now you want to stay away from the energy sector. Consumer discretionary, retail, and the broader market is where the action is right now. And the fact that the S&P made all-time highs yesterday, and these stocks are moving back down to their all-time lows is a very, very bad sign because the market's expensive right now. The market's slightly overbought, in my opinion. And I believe the market has a good opportunity to cool off a little bit. Not a huge cool off, maybe 3 to 5%, especially if the Democrats take the White House. It's very possible because Democrats regulate the market more. It'll become priced into the market. And if that happens, if we see weakness moving into this market, you're going to see the energy sector really take off to the downside. Both of these stocks, by the way, are in the Russell 1000, which are not that big. They were, I believe, in the S&P, but now they're in the Russell 1000. So the bottom line is avoid these stocks. Their market cap is getting weaker. Their payouts are getting smaller. These companies are literally at the brink of BK right now, or takeovers. I think we're going to see a lot of takeovers and mergers in the energy sector, not because the companies are doing well, but because the companies will need to rescue each other. And I think the Fed is going to allocate more money specifically for the energy companies over the next couple of months because the industry is just bleeding. I mean, bleeding. Now, I know we've talked about some really negative things, but let's talk about the positive. Almost everything you've ever heard about winning trading tactics, folks, is wrong. I'm telling you, the things I hear from some of my students, oh man, it makes me want to keep a Tylenol on my desk. But if you know how to tap into a counterintuitive strategy, you could stand to see gains of $4,440 or more. Ironically, get this, the strategy that I'm about to reveal is only possible thanks to the worst traders alive. I'm going to repeat that. The strategy that I'm about to reveal is only possible thanks to the worst traders alive. You flip their trades. If they have 80% wrong, you flip it around. You'll be 80% right. It's real simple. Fortunately, Josh Martinez and I, we figured out a way to do the opposite of what terrible trading tactics do. That means you could take advantage of them and potentially see awesome paydays. Just flip losing trades. We know the worst trades. We could flip them. And the worst trades become the best trades. Remember, there's a buyer and there's a seller and a buyer. So you could flip the script. Imagine you take the world's worst trader, you put him in a room, right? Think about this. And then you do the opposite of what he's doing. You don't have to tell him. Just take the worst trader in the world, put him in a room, give him $10,000. You go into a different room and you take the opposite side of his trade. Now, it's a little more complicated than that. Obviously, we're not going to put the worst traders in a room, but we've discovered their worst trading tactics, and we're going to exploit them and reverse them and potentially offer you guys an awesome payday. Gains of up to $4,440, even more in days. Average trade is held 7 days. The average profit we've seen is like 120% per trade, while the S&P is giving you 6%. You don't want to miss out. Stop following terrible trading advice. Click the link below to learn how you could turn losing strategies into potentially the biggest winners in your life. Follow the link below, click on it now. You got to check this out. This is the coolest thing ever. You're going to learn so much from watching this. I'll talk to you guys soon. Have a great day. Bye.